Hey taxpayers, it's election season, and as a CPA of almost 11 years now, I've got one thing on my mind, and it's which of these presidents are going to benefit us the most when it comes to our taxes. Hey taxpayers, it's Tiffany Gonzalez CPA here, and whether you're a family, whether you have a business, whether you just want to know what the impact is going to be to your wallet, stick around because we're going to talk about the tax plans or the proposed tax plans of Vice President Kamala Harris and former President Donald Trump. Let's start with Kamala Harris's tax plan. Now, she has proposed that she will not do any tax hikes on income earners less than 400,000. So if you are part of the majority of taxpayers that make less than 400,000, you shouldn't be too worried about her plan. But what about high income earners? The impact that she's trying to make on the taxes they will pay is pretty significant. For families making over 400,000, she's suggesting that the tax bracket should go from the current 37% back to the 39.6%. In addition, she wants the net investment income tax. This is an income tax that was proposed in the Obama era of 3.8%, an additional tax on all investments that would ideally fund the marketplace, Obamacare. She's proposing from taking that from 3.8% up to 5%. Now, for those making over $1 million in taxable income or 500,000 married filing separately, she's proposing that your capital gains not be taxed at a preferential rate. That means that your capital gains tax, these are things like the sale of stock, could be taxed at almost 44%. It would be your ordinary 39.6 plus the 5% that you would add on top with the net investment income tax. Now, besides this being like an enormous tax impact, what would likely happen would be that high income earners would avoid selling stock, which could create less momentum in the stock market and lead the overall economy to being impacted. Now, Harris has also floated an idea that is very unpopular and has caused a lot of controversy, which is taxing unrealized gains at death. This is essentially like treating as if when the person dies, all of their assets have been sold, whether or not they have, at fair market value, and those inheriting those assets would have to pay the tax for those gains. Right now, the way that it stands is you have things like step-up basis with real estate, certain inheritance are not taxed at all, and other types of inheritances are only taxed if and when the estate exceeds above a certain amount. So right now, there's a lot of different complex rules when it comes to inheritance, depending on the type of inheritance you receive. Now, on the ultra rich, we're talking net worths of 100 million or more. She's talking about a 25% minimum income tax, including the unrealized gains. There's a lot of controversy about this on social media, and the truth is it doesn't impact many people. Here, she's addressing the 1% of America and saying you're going to pay at least a 25% investment income tax. And we're curious to see how and if this is even going to be possible, as it's been hinted that the Supreme Court may even challenge the legality of this. Now, let's come back to some of the ideas that Kamala Harris has for those making under 400,000. Remember when the child tax credit in 2021 temporarily went up to $3,600 for certain children under 6 years old? She wants to bring that back. Right now, the child tax credit is approximately $2,000 a child. She wants to bring it back to $3,600, and she wants to do the same thing that they did back in 2021, where they advanced the credit to you on a monthly basis. So instead of getting a large refund in April, you would receive your child tax credit throughout the year. Truthfully, this was a horror show when it came to taxes, because if you didn't give the right amount of the advance that you had received for the child tax credit, or if you didn't opt out or opt in when you thought you did, this created a lot of discrepancies at tax filing time, where maybe your accountant or CPA would have told you what your refund was and you would have received something completely different. Now, if you're a new parent or going to be a new parent, she's proposing a one-time child tax credit of $6,000 in that first year, with the idea that it's supposed to help offset some of those baby expenses that you have in the first year. Between you and I always find that credits are somewhat of a government incentive. The government is trying to incentivize you to do something. And I do feel like the $6,000 child tax credit in the first year is more of an incentive for the existing population to have kids, as we know that more and more people are waiting a bit later in life to have kids. You may have also heard that for first-time home buyers, she's incentivizing or wants to incentivize people with a $10,000 first-time home buyer credit. We saw these large credits for first-time home buying back in the day, the 2008 crash, when no one was buying homes and the government again wanted to incentivize movement in the market. I think that this has a lot to do with the fact that since there's been so much inflation on the cost of homes, interest rates have been so high, there's a lot less people that are buying or they are waiting to buy. And so as a result, this $10,000 tax credit is meant to help not only ease the burden of buying, though I think sellers will raise their price, but it's meant to kind of move the market, allow you to make a decision based on the fact that you might get this tax credit. Now, on the business side of things, Kamala Harris isn't known for being that business friendly. Right now, the corporate income tax for C Corps is 21%, and she's proposing taking it to 28%. There's also something called an alternative minimum tax right now, where businesses pay at least a 15% tax on, and she wants to take that up to 21% tax. And the last bit about her plan that I want to mention is you may have heard in the stock market a very hot topic about stock buybacks. Many companies are buying back their stock, which is helping drive the price of their stock up because they perceive their own stock to be valuable. And so when you do this, there is an excise tax for the corporation that does it. And right now that excise tax is 1%. And she's talking about making it a much higher percentage. Therefore, essentially charging companies more money for deciding to do stock buybacks. Now let's talk about the Donald Trump tax plan. What you may not know is you are currently experiencing that tax plan. Back in 2017, when he was president, he did a number of changes to the tax code. And many of those changes were set to automatically sunset, another word for expire, at the end of 2025, which is around the corner. So this next president is going to have a huge impact on what our tax code looks like, because our tax code is either going to revert back to what it was pre-2017. The new president will either continue what's been going on since 2017, or they will completely change the code. So Donald Trump has said that he likes his 2017 plan and he wants to go and do even better. One of the most radical things that he's proposed is definitely not taxing tips for hospitality and restaurant workers. That type of income not being taxable could be huge for those that are working those types of jobs and in those industries. Though he hasn't been very specific, he also wants to drive some incentives for home ownership and buying homes. Now, on the business front, however, he has been more specific. Right now, the 21% corporate tax rate is something he implemented back in 2017, and he wants to bring it down at least a point to 20%. But there are some people in his camp saying that they would like to see it closer to 15%. Trump wants to do away with the clean energy credits that were introduced in 2021, like the EV credits and the solar credits. And he also wants to start taxing 10% on many of the imported goods. The idea there being that he wants to bring manufacturing back to the US. By taxing and creating these tariffs on imported goods, he is making the cost of these products almost as equal as if they were preparing them here, manufacturing them here in the US, thus incentivizing more manufacturers to bring their manufacturing here. The biggest thing I have questions about, and many of my self-employed or business owner clients are going to be impacted by, is the qualified business income deduction. This is an amazing deduction that was implemented in 2017 and has saved business owners and self-employed individuals hundreds of thousands of dollars over the last several years. And the biggest question on my mind and most of my clients' mind is this going to disappear at the end of 2025? Another big question is depreciation. For many years, Trump had inputted a 100% bonus depreciation on assets purchased, especially if you recall the large vehicle purchases. So these were vehicles over 6,000 pounds. These days, that has since phased down from 80% down to 60%, and it's supposed to decrease further, again, unless the next president either re-implements a 100% bonus depreciation or makes changes. These two items, the bonus depreciation and the qualified business income deduction, are huge for small business owners. And removing them while increasing the top bracket from 37 to 39 could mean hundreds of thousands of dollars for business owners in taxes that they were not paying before on the same amount of income earned. Imagine that. Imagine you make the same exact amount you made the year before, but you pay $10, $30, $40, $50,000 more in tax just because the code changed based on who was president. So what do you think about the Kamala Harris versus the Donald Trump tax plan? Which one is more appealing to you? Which one would have more of an impact on your personal situation? There is so much to think about when it comes to voting for a president, and taxes really are just one piece of the pie. But as someone who's been in this industry for over 10 years and seen many different presidents along the way, many different tax codes, it's definitely going to be an interesting one. So while you're at it, hit the like button and subscribe to our YouTube channel. Follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.